Now, one of the things that we've seen is that Airbnb prices are getting compressed. Show fans that's happening in your market. They used to make more money, now they make less. They more vacancies. So as that continues to happen, we do expect that people who bought, let's call overpriced houses, and now their cash flow is reducing, they're going to end up in financial turmoil, likely to start occurring over the next 2 to 3 years. Now, one other factor that's going to have an impact on this is the baby boom generation is now at the age where they don't have a choice but to sell. In fact, no, let me take that back. They don't have a choice but to die. And the baby boom generation, when they die, will leave their properties to the next generation. That's Gen Xers, who already have a house and have been transferring houses. What do you think they're going to do? Drop it in the chat. What do you think a Gen X does when they have an extra property on their hands that they don't really want? Drop it in the chat. What do they do? I see some really good answers in here. Cash out, sell, rent, wait, fight with siblings over money, then sell. Sell possibly at reduced prices to move it. These are very good answers. Now, a lot of the stuff the baby boom generation holds are single family homes, but they also hold multifamily homes. Who here's noticed most of the multifamilies are held by people who are older. These multifamily portfolios are held by older folks. So not only will they be letting go of single families that they live in, they'll also be letting go of investment properties, which will create an opportunity inside the market as investors. But in the interim, what is that opportunity actually creating? It's creating a drop in prices. True or true? Not interest rate related, but simply life expectancy related. We'll call it the cycle. There's a 80-year cycle inside real estate that dictates when a generation gets to a certain size, they buy. When a generation gets to a certain size, they transfer. When a generation gets to a certain size, they sell. The cycle runs about 18 years. About every 18 years, a person gets to a new place in their life. Let's call it 18, you're not buying real estate. You're maybe moving out, becoming a renter. Let's call it 36, the average first-time home buyer's age. Let's move forward. Let's call that 44, the average Generation X moving into a new asset class, shifting up into the next asset class. Did I do 36, 36? 54 was what I meant. Average Gen X shifting asset class. And then you have 62, the average retirement age across this country, where a person now sits on that asset and holds and holds and holds and holds and holds and holds, and then eventually at 79, they pass away. Show fans, we're catching this. Statistics. This is what dictates the movements in the marketplace, not interest rates so much, although they do have a factor. It's mostly what is the next big generation doing? Who here believes you can take advantage of demographic shifts? Absolutely. The affordability challenge. So there is a challenge right now where rents continue to go high. Houses are more expensive than the cost of renting. And so you have a place in the market where people are saying, well, I could just rent for cheaper than it is to own my house. Who here knows that is true in your market? Is that true in a market you're in? Okay, there's a few markets out there. Who here noticed in their market that buying a house is still cheaper than rentals? Anybody notice that in their markets? Less and less. Okay, Sal's noticed in we've got one market out there. There are some markets, for sure, stragglers, but for the most part, you're gonna notice that housing affordability is starting to make less and less sense. And so only the investors are coming in, and it's investors who are capable of splitting up their units. Next, the commercial real estate sector. Office space, dead. Retail space, destroyed. These two make up a huge amount of business. In fact, the average office space right now is looking at a 15 to 20% vacancy as expected. It's now expected that much office space will be vacant. Retail spaces. Who's driven through a city that used to have a bustling retail center, now has a whole bunch of vacant buildings on the first floors, the mixed-use properties, all those first units are vacant, glass is there, for rent signs, they're maybe bundled up, covered up with somebody's living in a commercial space. Has anybody seen this? The commercial space converted over to a residential unit. So you're seeing that in some of these gateway communities, smaller towns. and that's a space that'll continue to shrink and adjust. Retail is shifting. The stores, the pocketbook store, the clothing store, these are going away with the small uh, shop that used to repair lawnmowers. They're going away, and what's happening is you're seeing different places come in. You're seeing the coffee shops, the smoothie shop. You're seeing the yoga studio, the karate studio. Who here's seeing these shifts in the marketplace? Those retail centers are changing what they do and what is available to you. Industrial. Believe it or not, industrial strong in this country. The industrial sector does seem to be having a boom, and it does seem to be like it'll continue to stay the way it is. The one I haven't talked about, my favorite, is multifamily. Multifamily, specifically workforce housing and affordable housing, seems to be on the rise. It seems to be that when house prices go up, renters shift to multifamily. They shift to what is affordable. Who's seen that in their space as well? Hmm. So what does this do for single families in the future? My outlook, I would say for real estate investors who flip houses, you may already be looking at slimmer margins when you flip properties. You may already be looking at the risk or the time on market of your flips when you put them on there that they're not selling as fast as they used to. The carrying costs now go up. The length of time that we're holding it, the longer we hold, the more our mortgage starts to eat into our profits. Has anybody ever flipped a property and knows what that's like? Having to pay the hard money costs for a little bit longer? It can completely erode your strategy and take away any kind of profit that happens. So I do see for the next 2 to 3 years quite a bit of risk on the single family flips. Not because the flippers didn't do a great job, not because they didn't buy it right, but because the market itself is not absorbing the properties at the rate that it used to. So what opportunity could they take? They could shift and do a long-term hold where they buy the property for a rental scenario, or they go into an Airbnb or a mid-term rental scenario where they can hold it a little bit longer, or they shift entirely and they shift into the multifamily space, which still operates very much like a flip with the renovations and the acquisition fees, but it gives them a little bit more stability in the future. Multifamily, on the other hand, looks strong. Multifamily challenges are that they're becoming overpriced. It's harder and harder to find an affordable unit where the rents actually justify the purchase price on that rental property, especially when we're in the 1 to 4 market. Who here's noticed that? The 2 families, 3 families, 4 families, they seem to be really overpriced based on what the numbers are. What could be driving this? Do you remember the Gen X community, that group of parents whose kids are coming back and living with them? Sometimes it makes sense to not have them live with you in your house. Sometimes a barrier and an outside hallway door is a little bit more desirable. So what they're doing is they're buying duplexes, they're buying up triplexes, they're buying up 4 families for their family to live in, almost like communal housing. So we see that sector increasing in price. What we don't see is the 5 units, 6 units, 12 units having quite as much appreciation. We see those only going up when an operator does a very good job, when the rents are increased, when the cap rates are high, and we see that happening all across the country. Who's seeing that happen in your market as well? Even the large multifamilies going up in price? Seemingly impossible why they would keep going up the way they are. Well, they're demanding better rents. The rents have increased. We were having this conversation the other day. It used to be that the third floor got a lower rent than the second floor, and the second floor got a lower rent than the first floor. We're now noticing that doesn't matter what floor they're on, all the rents are the same. You now just look at it's a 3 bedroom, it gets this much rent. It's a 2 bedroom, it gets this much rent. Show of hands if you notice that in your markets. It doesn't even matter if it's a nice unit. It just the unit. It's a 3 bedroom. It gets X amount of rent because now people are just looking for the inventory. We're in an inventory crunch, so it's an opportunity. Regional market volatility in the United States. We have one of the hottest real estate markets in the world. In Canada, they have what seems like an even hotter real estate market. In cities like Toronto, the affordability is so out of control that people are starting to shift into the United States to buy real estate. Show of hands if you've heard of this. If this is new to you, you can put your hand up now. Anybody new to you for affordability? Okay. There are countries. In fact, India is becoming one of the major countries that is investing in the United States because unlike Canada, their real estate's not going up. In India, their real estate's going sideways and going down. And they're finding that in order to protect their money, they have to put it somewhere else. Same with China. Same with other emerging markets that are doing very well. They're shifting out of their market and shifting into the United States because it's worked very well. In fact, China's now at the tail end of it, and they're shifting back to China. Who here's noticed the Chinese are not buying real estate anymore? Right? Real estate agents would have this. So about a decade ago, all the real estate that was being bought up from out of country was Chinese. Now we're seeing that shift to be Indian money, and the Indian money is coming into the United States. The Chinese money has stopped, and it's shifting its way back into China itself. So we now have a competing market, a market where people used to only say the United States was the best place to buy real estate. People are starting to say China's a great place to buy real estate. Who here would never buy real estate in China? Right, because we're Americans, we're United States. Our inventory is equal to theirs. It makes a lot of sense for us to stay here. But to other nations, they're shifting their money flow, which was a big boon to our economy and drove our prices up quite a bit. You will see that a lot of the sellers who are letting go of real estate are from out of country and they're selling their Chinese. Has anybody noticed that yet? Caught that trend? This is happening. Whether you see it or not, it's happening at the larger scale. So the global economy has an impact on the United States. What other investors are doing does drive our prices. Canada coming down to invest, India coming in to invest, but China pulling out has created a little bit of, let's call it breathing room for our inventory. So it still leaves some opportunity for us to invest. Hedge funds. Let's talk about the big money. Hedge funds are buying up everything, it seems. It seems they're buying single families. It seems they're buying multifamilies. They're buying mobile homes. They're buying storage units. It seems the hedge funds are acquiring absolutely every single piece of real estate they can in America and in China. The hedge funds have increased their amount of exposure to both markets. That means that you have a lot of competition when you're going up against for larger buildings. Anybody in the 100 unit plus market, 100 units, 200 units, 300 units? If you're not in that space, you won't feel that pressure. But in the large multifamily space, you'll feel it in Georgia, you'll feel it in Texas, you'll feel it in Florida, you'll feel it in Arizona. The hedge funds are continuing to acquire large amounts of multifamily and single family, although they slowed down a little bit in the single family space. They're still acquiring a large amount of rental properties. In fact, they're even building to rent. Right now, I have a friend in Texas who's building 3,000 units because BlackRock came to him and said, "Hey, could you do this? Could you build units for us? We'll just acquire them at 25% more than you paid for them." But fans, we understand it's happening, whether you know about it or not. It has an impact on the market. So supply and demand dynamics, construction trends. A majority of reports show significant housing shortfalls. Average increase in construction costs year over year has been 12%. What I found in Fall River, in one of the markets that I used to be able to buy an HVAC system for $1,000, it's now costing me $4,000 to install the same exact HVAC system. This is because the cost of living has gone up. It's because the cost of labor has gone up. And all of those changes in COVID were not just COVID related logistics that stopped and were short term impactors for us. There's also been this monster amount of inflation, which has driven up the cost of all labor materials and all labor itself, which means the prices of real estate must go up when new. So new real estate prices are going up. The cost of development and building has increased. And the decrease in building permits issued compared to the pre-pandemic levels is about 24%. As of this year, we're seeing that permits being issued to new development has slowed down by 24%. In the last 3 years, it was continuously on the rise, on the rise, on the rise, on the rise. And this year, major developers all across the country are pulling back the amount of permits they're requesting. What this means is they're getting a little bit nervous about inventory. They're getting concerned that they may have, maybe not they didn't do it, but maybe the other investor who came in after them, the other developer, might have overdeveloped their markets. A sign of this would be cranes in the air everywhere you go in a major city. If you see a bunch of cranes in the air, the people who pulled the permits first were in a really good spot. They've developed, they've built, they've leased up. Now they're starting to notice all these other cranes are popping up around their building and starting to drive down their rents, starting to create too much inventory in certain markets. There are specific markets that are a little bit oversupplied in rental inventory.